Welcome to today's market report.
Global equity markets edged lower on Thursday and oil slipped while the safe haven dollar rose after the latest red-hot US inflation reading heightened investor fears about Federal Reserve interest rate hikes and a possible recession. Wednesday's data showed US consumer prices jumped 9.1% year-on-year in June, up from May's 8.6% rise. The data was seen as firming the case for the Federal Reserve to raise rates aggressively. Policymakers might consider a 100 basis points increase at the July meeting. The Pan-European Stock 600 index lost 1.53%, and MSCI's gauge of stocks across the globe shed 0.82%. Stock indices tumbled on Thursday in America after weaker-than-expected earnings from big US banks, JP Chase and Morgan Stanley, underscored growing fears of a sharp economic downturn. The Dow fell 0.46%, the S&P lost 0.3%, and the Nasdaq added 0.03%. The dollar soared to a 20-year high, emerging as a preferred safe haven. Amid growing economic risks of late, gold slumped more than 2% to a near one-year low on Thursday. The dollar index rose 0.351%, with the euro down 0.47% to $1.0013. The Fed probably needs to temper people's expectations in terms of what they can do. In the past hiking cycle, we have observed that inflation kept rising during the hiking cycle. It takes time for the monetary policy to affect inflation. The yield on 10-year Treasury notes was up 5.5 basis points to 2.961%. The 2-year, 10-year part of the Treasury yield curve is the most inverted it has been at any point in this cycle. The 2-year is at the moment trading at 3.134%. Oil prices fell as traders saw a large US rate hike, possibly reducing crude demand. US crude fell 0.07% to $96.23 per barrel. Brent was at $99.63 per barrel, up 0.06%. The British pound is trading at 1.18.
This is today's market news. Thanks for listening. We'll see you next time.